How's it going, traders? It's your boy here, the Forex Amateur. Welcome to another video by the Amateur Effect. So this is going to be a follow-up video based on the conversation that I spoke about, or the topic that I spoke about on the previous video on market structure. So the point of this video is to be a very quick breakdown of bearish market structure. So I'm going to title it something like bearish structure in a minute, or bearish market structure in 1 minute, or something to that effect, right? So the goal is to just communicate the topic really quickly, right? So very quickly, so what we're talking about is bearish market structure, right? So we're obviously going to be looking at the market doing its thing, right? And pushing to the downside, something like that. So I basically drew a bit of more of a complex version of it. Bearish market structure, how do you identify bearish market structure, right? So firstly, the first characteristic is what you use to identify bearish market structure: lower highs and lower lows. So as long as price is making lower highs and lower lows, it is showing evidence of a bearish market structure. Remember, this does not mean that you need to be selling, but it does mean that you need to be more likely looking for other confirmations to take sells, right? So in this instance here, we can see, all right, price made a high, it made a low. We can call this a low, we can call this a higher low, we can call this a higher high, and then we can see right at this point here what happened. Price broke to the downside and formed this low. So this now forms the second characteristic of what we would use. The second characteristic, however, I would frame it as not a identifier, but a verifier, right? But we'll put it under here and we'll say number 2, this is how you now verify that you are in a bearish market structure, by breaking previous lows, right? So this is how you will verify that the market is in a bearish sort of structure, or the market structure is bearish. Very simple, nothing too complex. So as long as the market is pushing to the downside, breaking previous lows, you can see this was a structure low that created this high, and price broke it at this point here. So that is showing us a bearish precedent in this market. However, we will not use that as a selling opportunity, because now what we need to look for is for price to come and make a lower high, and then inside of this lower high is where we will be looking to take sells. So this is the entry point, or this is the area where you would basically look for your sell. So very important. The last point is number 3, respecting previous highs, right? What can we notice about what we can see on this specific illustration that we've drawn here is that we broke structure at this point. Let me actually change the color of this pen so you can see. We broke structure at this point, right? And what did we do? We came back, we formed a lower high in this area, and this lower high does what? It respects this previous high. Meaning respecting previous highs, simply meaning that the previous high is not violated, or price does not trade and close above it. Price can always wick above it, right? That is completely normal if that does happen. However, remember that market structure is not the only precedent that you would use to take your trades, right? So very simply, a recap of what we've just covered is bearish market structure firstly forms lower highs and lower lows. The moment you see lower highs and lower lows being formed in the market, there is a possible bearish sentiment to it. Once you've identified that, you now need to move to your 2 steps of verification. The first step of your verification will be a break of this previous low, and the second step of the verification will be respecting the previous high, which simply means, as I spoke about yesterday, that you will simply have some sort of a level of resistance between this previous high and between this broken low. So anything that happens inside of this area would be, or whatever you would expect to happen in this area here, would be your other confirmations that you use for sells, whether it's double tops, whether it's head and shoulders, whether it's engulfing candles, whether it's harmonic patterns, whatever it is that you use, RSI divergence, or whatever it is that you use for sells, would be what you would be looking to see in there. Hopefully this video has shed some light on the topic for a few of you guys. I'm going to try and do a couple of these type of videos where we just communicate a specific concept, and then we'll see how we can build on it thereafter. Until next time, I wish you a blessed and a profitable trading day.